Please type your role or function. I've sent a message to everyone on the chat. Okay, fantastic. So as we progress, we shall be examining in detail information around how to grow revenue and also how to reduce expenses. We shall also be looking at the best way to make cuts. At this trying time, a lot of executives are considering cutting costs in various places. If you choose to cut costs, which areas should you cut? And how often should you cut? We'll also be looking at how you can focus on asset recovery and, if possible, divest as a way of either surviving or growing. Then a sensitive area, once it comes to employees, what do you do? Should you cut employees? How do you manage cutting labor costs? Maybe not cutting employees, but cutting labor costs. Okay, so these are some concerns that we'll go through in our conversation at this point in time. Throughout this session, we will employ you to please put your audio on silence. Just mute it, mute your audio. If you want to contribute or you want to share or ask a question, please go ahead and type question, chat your question. And at an appropriate time, the instructor will take your questions and respond to it. If you're having network challenge and you notice that you're not able to see or it's not very clear from your own end, it is okay for you to switch off your video. You can still hear us and you can still see the presentation also while your video is off. All right? I wish you a good time as we discuss, and please try to take away something from here. Do not let Mr. Ayo walk away without sharing all he has brought. Okay? Even though we run out of time, we'll find a way of making sure he downloads everything. If possible, we'll follow him back to where he came from. I am hungry. I don't know how hungry you are. Hungry for information, hungry for knowledge. So I have my pen and I have my paper. So I'm ready to take notes as he speaks at this point in time. Thank you all. I will now hand over the discussion to Mr. Ayo as he takes us through. You can unmute, sir.
Good morning, everyone. Yeah. You're all welcome to this session. Mr. Joel, thank you so much. This is, as they call it, these are unprecedented times, and there can be a better time for this topic that we are discussing now, which is we are talking about corporate finance, especially in the I will call it in the middle of a pandemic. So I hope everybody is fine and well, and I hope everything is well with everyone. I hope our businesses are doing well, no matter how it seems. So we were asking for which areas of business we represent. Only 2 people responded so far. We have an accountant, we have HR. I presume some of us here are business owners. I also presume some of us are small business, while some of us are with the big businesses. I hope I'm right. So to go straight into the matter, I would like to ask a question. If money were food, can you please tell me which one would be your favorite food? If money were food, which one would be your favorite food? You can go ahead and type it. No, dollars is not food now. Somebody said dollars. I said if money were food. So for some people it might be pounded yam, some people it might be plantain. Oh, semo. Some people it might be rice. Some people it might be salad. Some it might just be water. And so it might be Coke or Fanta. So if money were food, which would be your favorite? Ah, chicken with basmati rice, correct. Which other one? T-bone stick with salad, interesting. Correct. Any other ones? Any other ones? Anyway, why I'm asking my question is, okay, bread and beans, correct. I like the local taste, flavor. Why I'm asking this is that's what we're talking about, and you must have the ideology of your favorite food because money can represent that. And what corporate finance is about, your view of your favorite food, which is money, and how you can make sure you still eat your favorite food in this pandemic, because nothing should keep you from having access to your favorite food and connecting it to your stomach at every point in time. And so if money were food, that's how you should start thinking of how do you ensure you still eat your best food. Nobody mentioned suya, nobody mentioned pounded yam, nobody mentioned eba. Now, wow. Because I know on radio and when they ask what's your favorite food, someone says eba. Somebody else will say, pounded yam. But here we are calling out those Oyibo T-bone stick and salad. Now wow. And then I see some of us are being health conscious nowadays. Semovita, beans and bread, correct. Anyway, we are all doing well. So corporate finance. We are talking about corporate finance and managing our business in this downturn. And I hope I will make a good, although that's what I plan to do, delivery on that for all of us. Like Mr. Joel said, I hope we have our writing materials down because I will say a lot of things that you're already familiar with, and I will say a lot you might not be familiar with. I would change your perceptions on some items, and at the same time, just buttress some you already have. But at the end of the day, we will all be learning because I'm also here to learn. So I like the classes to be interactive. Who is saying she's on a diet? You can't be on a diet too. When is money? Are you saying you are avoiding money? Money, in fact, it is the rich that are on diet and they always go after money. So please, you cannot say you're on a diet when it comes to money. Okay. So we'll be talking about it and different aspects of it. So I'll be sharing my screen in a bit. I hope we can see it. Good. Yes. So corporate finance, profitability in a financial downturn. That's what we are talking about. As a point to note, before we even go into the heart of the matter, when you deal with money, especially with relation to profitability and business, you need to take that thing that makes you very happy, which is money in this case, and remove all emotions from it. Let your decisions going forward, especially now if it's in relation to your business, be purely objective. That is, there is nothing about emotions or relationship. This is not your friend, this is not your enemy. The issue is your profitability as a business, because that's the only way you can move forward in a financial downturn. So, as usual, we need to know what is even this corporate finance we are talking about in the first place. We've already listed the contents. We'll be talking about expenses, managing costs, managing our assets, managing our staff, and then corporate finance itself. It deals with the business capital structure, how you fund your business, and how you increase the value of your business. And it includes all the tools you'll be using and how you also even use these tools. Basically, that's corporate finance. And the purpose is to maximize the value of your business. And it also includes proper strategy planning. And while you are trying to achieve profit, you should also make sure your business doesn't die. Because there are sometimes you are running after profitability, but by the time you hit it, you look back and your business does not exist anymore. So corporate finance is about your ability to balance everything, get maximal profit, get maximal value, but let everybody, including you, remain alive. Because what's the essence of making profit at the end of the day and then you just die or you have one terrible ailment? So corporate finance is about balancing all this. The ultimate owners of your business are the shareholders, and corporate finance is about increasing their value in an optimal way and being able to make decisions between projects and being able to get the best value from every project or every activity you engage in as a business, and ensuring that returns are of optimal value. So it's about asking how you maintain your value proposition as a business. I hope we understand the meaning of value proposition. Value proposition is simply the promise you made to your customers, which is what you deliver in form of your product or your service. What do I mean? MTN, let me use that as an example. Does anyone here work in MTN? MTN said they will be with you everywhere you go. Everywhere you go. When we look at it, are they delivering on this service promise? Well, I think so, because there is no state in Nigeria that MTN service does not work. There is nowhere we go generally within even this Africa, within the African continent, that MTN is not there. And so automatically their value proposition, which is their service promise, is that everywhere you go, you will find an MTN you'll find MTN working there. And I think they've kept to this. So you, as a business, first of all, let's revisit it. What is your value proposition? If you don't have one, it's time you wrote down one, or it's time you created one, because that's where it starts. The basic is you must have a service promise in delivering your product or your service. Coca-Cola says they quench thirst as long as you take it cold. When you check every Coca-Cola available, they always quench thirst. At least it seems so. Which is why even when they were working now, coming to deliver your service through vending machines, the vending machines had to chill the product. So that whenever you take a cold Coke and you drink it, it quenches your thirst. Remember, I didn't say to kill your hunger. It didn't say it will make you high. It said it will quench your thirst. And I think they've been keeping to that. That's Coca-Cola. What is your own value proposition as a business? There are two main things there: value proposition, then shareholder value. Shareholder value must be created in such a way that at every point in time, you are able to deliver it. So it's not about, well, what I mean by that is this. At least I'm sure 50% of us have shares in a company somewhere. And what do you always look out for? It is your dividend value. Giving proper value to shareholders means at the end of this year, you are able to pay 50 kobo. And at the end of next year, you should not pay anything less than that 50 kobo. And then at the end of year 3, you should not pay anything less than that 50 kobo. Instead, it should, if possible, it should be a continuous increase in the value you pay to shareholders. So automatically, if you are looking at what you are paying your shareholders, even if you are a small business, please note the main shareholder, if you are the founder or the owner of the business, you also get shares from your business. So you must always make sure the value you create is good enough and consistent over the years. So what am I saying? When you are dealing with downturn, economic downturn like we are now, and you take decisions in your business, your decisions should be long-term. No more short-term decisions. You don't take a decision for now. You don't take a decision because you don't have money now. No, you take decisions that in 3, 4, 5 years' time, those decisions are still relevant. That's how it works. In 3, 4, 5 years' time, those decisions are still relevant. Those are the decisions you should be making now. Now, what are those things you'll be looking at? If for this class, the things we'll be looking at, because we can't go into the whole corporate finance as a course, and this is now looking at corporate finance in terms of business profitability and economic downturn. So what are those things we'll be looking at? The first one, the most important one, is your working capital. Your working capital. How do you manage your working capital such that your business doesn't go under? And that means the key element, working capital is made up of different elements, like your stock and other things, but the key element in this case is your cash. You know, cash is the soul of your business. The day your business does not have cash anymore is the day the business dies. Forget the amount of assets you have, the number of staff and all that. Cash is what keeps your business alive. It's the blood that flows through your business. And you know, once you don't have blood, there's no business. So that's why working capital is number one on our list of what we need to learn to optimize. And most especially in this case is cash. Cash is king. You need to learn, we'll be discussing how you manage your working capital so that your business still remains. Your human resources, as the human beings, I think the better word would have been human capital, not human resources. How do you manage the human beings, including yourself, in that business to get optimal value? Then, how do you now manage your assets? And then a key issue we often neglect, especially when we are small businesses, is the brand. How do you manage your brand? Your brand is the totality of your business. From your business name to your business colors to what your business represents. In fact, that value proposition I mentioned, that service promise that you gave to your customer represents your brand. The day you fail on your service promise or your value proposition, you have eroded your brand. And each time you keep failing, you keep eroding your brand. And your brand starts dying. And the day your brand dies is the day we start posting the obituary of your business, because it ceases to exist. So next is your liabilities. Corporate finance doesn't just look at your assets, it also looks at your liabilities. How do you manage it? That's your debts, those things you owe, both in the short term and in the long term. And with the situation on ground, you should be able to renegotiate some of your debts from the short term to long term. If time permits me, we'll go into how this can be done and how we manage that. So, corporate finance entails managing your business profitability while minimizing your losses. In this pandemic, there will be a lot of losses. There's no business that is not affecting some form of reduction in revenue, reduction in profitability, some form of reduction somewhere. And anytime a business faces a reduction is a loss, whether it reflects in the books or not. So most necessary strategy will be redefining your customer and how you relate with them. What am I saying here? You know, HR, somebody said she's in HR here. In HR, is the company people that are your customers. That is either you as head of HR, you are managing the staff, or you are managing the people in the company as HR consultants. Either way is the people. But now, your job or your role might seem threatened. Why? The new, if I use CNN term, it's called WFM, working from home. If you are working from home, why do I need HR anymore? Everything is online. But the truth is your job is not threatened. What you need to do is redefine that your job. How do you relate with staff when they are working from home? How do you place more value or get more value from them when they are working from home? So you are redefining your customers and how you relate with them. It's not that your job is threatened. And that's HR as an example. But it affects every area of business. You need to redefine who your customer is. How is your customer now? A lot of people, especially when your business is the type that entails a lot of contacts, but now we are saying no more contacts. You need to now redefine, yes, is this person still my customer? If he or she is, how will I now be relating with them when no more contact? Just like sports. Because of the minimal need for contact in sports, it's sports gaming that is now getting very popular. So that's the same thing. You need to now redefine it. It is when you are unable to redefine your customer and how you relate to them that your business is dying. So this is a critical thing that you need to do. Define your business. So once you've done that, the next thing you do is you now need to measure your business, especially in the area of expense, and look for where you can cut reasonably. Look for where you can cut reasonably. Because some of us, when we want to cut, some of us will use blade, some will use scissors, some will use knife. Then some people will go and carry cutlass to cut. But the truth is, please, let's do it gently. You can start with that blade and then start, slowly progressing. Because if not for the pandemic, you didn't even need to cut anything. So do it gently. Why? You might cut with blade and everything seems okay. So it's fine. You look at it. It's about the numbers. Always check the numbers. But sometimes you might cut with blade, it still doesn't seem to be right. That's when you now go and get a scissors. If it's still not working well, then you now go to the knife. And more often than not, if your numbers are right and you're on top of your numbers before now, you might not need to get a cutlass. Before we even talk of going to get a hacksaw, after cutlass is a hacksaw, and then that is working, you go and carry axe. And if that doesn't work, there's bulldozer to just bulldoze the whole thing. But let's do it gently. It's one step at a time. One step at a time. So when you are looking at where to cut, the first thing is, what do I cut to boost my profitability? That's looking at the bottom line. What do you do that affects the bottom line? What would you do? And while you are working on your bottom line to look for what to cut, at the same time, don't ever neglect the place of increasing revenue. Yes, we are in a pandemic. It seems so difficult. It seems so crazy. But it doesn't mean that there are no other ways of increasing revenue. There would always be a way. What you need to do is first accept that there are ways of increasing revenue. And some of these ways of increasing revenue might be in the areas of looking for new markets to go into, looking for how to get more staff to do more than what they are doing presently, especially if they are working from home. It's sad. We are all, anyways, everywhere, we're all still trying to get used to this working from home issue. Some of us now forget the difference between 8 hours and 24 hours work. We now work till we break down. And then at the end of the day, we are unproductive because the whole thing fails. But the truth is, we need to now clearly define our work and separate it from when we are playing. And then even our work that we are doing, we now need to be defining how efficient we are. There's a difference between efficiency and productivity. Productivity is simply saying that you are working, you are productive. That is, that thing you are doing is still relevant. And so because of that, you are working. For example, the person that used to prepare reports is still preparing the reports. But efficiency now is, why is it only one report that person is preparing? Are you sure we might not need, instead of having 4 people do 4 different reports, why can't one person now do just all 4 reports? That's efficiency. That is, at the end of the day, all reports are still being prepared, but now instead of 4 people preparing it, it's now only one person preparing it. That's efficiency. Then, like I've mentioned, going into new markets. And then if you define your customer clearly and you have redefined how to relate and how to deal with them, the truth is it will be easy now finding, it might be that product you used to give them is no more necessary. Or you need to now redefine that product. So once you do that, automatically you'll come up with new products. You don't cancel that product. It's just that the number of customers that use that has reduced. What you now do is create a new one and rebrand that for your new set of customers or based on your new definition of your customer. That's all you need to do there. Then this time is the time that you need to know your numbers. How much does it cost to run your business in a year, in a month, in a week, in a day, even per hour? It's time you know that. If you didn't know that before, please take biro, take paper, write it down. What do I mean? What are those costs of running your business? Number one, your business location. It might be a rented place. How much is the rent? Break that rent down to, let me be very practical. Let's assume you have an office located in a 4-bedroom duplex in Lekki Phase 1. That's about 6 million naira. So a 4-bedroom duplex of 6 million naira means annual cost of having a location is 6 million. How much is it per month? You divide that 6 million by 12. That comes to 500,000 naira per month. And then you come to per week. How much is that 500,000 naira per week? I think it's about 150 or 125 thereabouts. Then now that's a week. So every week, break even when it comes to location, you must make 125,000. You now break that down to per day. Let me quickly calculate it so that we are very practical. Your 500,000 per day for a 5-day work week is 100,000. So there is no day you do not make. You must make 100,000 if you know your business needs to be profitable in every day. And then if per day is 100,000, this is the dicey part. How much will it cost you per hour of keeping your business open? It's very simple. You divide, let's assume your work day is 8 hours. So you add, no, we stay within the 8 hours, because being open is the number of hours you are open to your customers, not the number of hours you are in the office. We need to get that part right. It's not the number of hours you are in the office, because some of us, we sleep and wake up in our office. You resume in the office by 6 a.m. and you leave by 9 p.m., if not 10 p.m. And then when they now ask you how number of hours you work, that's what you count, which is about 16 hours. I'm sorry, that's a wrong calculation. The number of hours that you calculate that you work is the number of hours that you are open to your customers. And so for an average business here in Nigeria, you are open for 8 hours. So for 8 hours, you now divide that 100,000 naira rental value by 8. And that gives us 12,500 naira. So what you need to be doing now is any business or any transaction that cannot give you 12,500 naira net, then there is no need going into it, really. That's the situation we are on ground presently. No offense, no emotions, nothing. Any business. But you don't just cut off. What you need to do now is look at that business or that customer and see, is it possible you help the customer improve their business or improve the way you deliver your service such that you can still make that 12,500 without cutting that customer off. If you can't, then you look at, is there a new product or a new set of products or services you can introduce, or have someone you can collaborate with? This is not the time for competition. This is the time for competition, for collaboration. Who is it you can collaborate with such that by the time you have a basket of services or products that you are offering this customer based on your new definition of the customer, where for you, the net that comes to you is that 12,500 for every hour you are open to that customer. It is when you have looked at all these options before you decide you are very sorry, you have to move on from this customer. And then don't just take the decision on your own. Sometimes you need to go and meet the customer and tell the customer your challenge. Your customers sometimes know your business more than you, especially in this kind of areas. They will give you feedback that, okay, what if you do it this way, or you do it this way, or you do it this way? And then these minimum amounts can be achieved. And this is just rent. You can see how expensive it is. This is just rent we are talking about. There are so many other aspects. Is it the assets in your office, the equipment? Is it salaries? Is it even adverts? Adverts should have a yearly cost. What is it? You will calculate all that. So with that, you're on top of your numbers. Because when you are taking your decision, remember I said it is numbers, it's not emotions. It's numbers, it's not emotions. So based on that, you set up a proper accounting system. You effectively use the system to keep all these records I mentioned. And there are so many accounting systems out there today. Even if cash flow is a challenge, there are free ones. Go online, you will see them. They even come as mobile apps that you can use both on your systems and in the office, so that on the go, if you're working from home, you're on top of your numbers, because numbers speak. In accounting, we say numbers talk to us. We know more about you when we look at your numbers than what you are saying. And it's simple. Even in science, those rules work. It's so important. Numbers speak. So, and you keep these records. Normally, you're expected to keep all your financial records for a minimum of 3 years before you have to discard of them, or I think 3 to 5 years before you're allowed to discard of them. So keep your records. Keep records of your sales, keep records of your invoices, keep records of payments, keep records of deposits, keep records of your staff. This is time to have it. Imagine if you had staff all this while. I've seen people like that. Somebody has worked with them for 20 years. They don't know where the person stays. Why? They are so used to each other because, you know, the example I gave, they resume in the office by 6 a.m., they close by 10 p.m. Where is the time to start discussing about where is your house? Because the office is the house. It's sad. But now that he's working from home, you need to have those records. And you need to know where do they live, how are they, because those of us that, all this while you've neglected your house, it's time to put your house in order. You need to keep records of sales, keep records of your customer, keep this record for reference sake, and also have backup. There are so many backup devices online, and starting from your laptop, you can start from your laptop and keep backup of all transactions. But most of these softwares, especially the ones online, come with automatic backup, such that if like your system crashes, you can always go back, log in from another device, and all the information are still there. So keep your numbers, keep them, keep record properly. And if you are the owner of the business that you've never been bothered about your numbers, all you worry about is how much is in the account and how much of it can I spend. I'm very sorry. It's time to know how much of it is actually profit and how much of it is actually expenses. And then out of those expenses, which ones can you cut? Which one can you do without? Which ones can you reduce? And then out of that profit, is that amount actually profits? Can you actually make more than what you are doing now? Then you start on a journey towards getting to that. You need to separate your personal expenses from your business expenses. You need it now more than before. You need to separate your personal expenses from your business expenses. It's not about the size of your business, no. It's about the size of your accounts. If you don't do that, especially now in this working from home, it will get all muddled up and you might think you are making profit, but you are spending the money on personal. I can't think of a word now, but this sounds negative, but you are spending the money on personal frivolities. You are at home, you check the bank account, you have 100,000 there. Your child is saying that they are tired and they are bored, you take them out. Is it not 100,000 that is in the account? You spend 20,000 on lunch. 3 days later, they ask again. You take them out again, spend another 20,000. Business is not, sales are not coming in, but you are spending the money. Before you know it, you spent 100,000 in 1 month, and then there's no business. Business is going under. But if you separated your personal account from your business account, business money is 100,000 is in the account. Check your personal account. Is there money there? If there's none, then you don't have money. This is a time where you need to do that because sales is no more as guaranteed as it used to be. So that's why it's so important. Then somebody has a question. Okay. Okay, let me just quickly take this. Someone is asking, in times like this, should our target be efficiency or effectiveness or both? The truth of the matter is that at every time, whether in good times or in bad times, they run hand in hand. They are 5 and 6. You cannot leave one for the other. If you do that, it's also failure of the business. You cannot leave effectiveness for efficiency, neither can you leave efficiency for effectiveness. They run hand in hand. What you need to do is now create a balance. Maybe before now, your aim is always about effectiveness so that profitability is high. Or your aim is efficiency so that costs are low. But now you need to look for how to rejig it such that they both always and will continue to run hand in hand. It's not, you can't leave anyone out. It's always about both of them. Let me give you a reason. If you are now focusing more on efficiency so as to cut costs, it might get to a point where it will affect quality of your output, either in service or in product output. What happens? The quality drops. What happens? The customers get dissatisfied. What happens? They go. Customers don't complain with their mouths anymore. They complain with their feet, in case you don't know. So if you are not offering the quality you used to do, or you are not even improving on that quality of either service or product, the customer will simply walk away. And that's their own way of complaining, and you're on your own. So if you think because the people are still there and they're smiling with you, I'm very sorry. Check your accounts. That's the numbers. They will tell you if the customer is still doing business with you or not. They don't need to tell you anymore that they are not happy. They will just walk away. There's nothing you are doing that does not have an alternative anymore. So that's how important it is. You need to check your numbers, create a report. Like I used to have a customer, the first thing he wants to know is what is cash flow report. I'll say, what profitability? He said, no, it's not about profitability. The day he doesn't know his cash flow is the day his business is dying. So it's when he sees that his cash flow is positive, that is, there's money in his account that can afford to take care of any sudden expenses. That's when he now goes to check, is my business profitable? That's when he goes to check, what's my balance sheet size? How many assets do I have? First thing for him is his cash flow. And in this period we are now, that is what should be priority for you, is your cash flow. Do you have enough cash to meet your monthly bills as they fall due? If you don't, press the emergency bell and start looking for how to raise that cash flow. Looking for how to raise that cash flow. That's what should be of priority for you. First, what are the things you need to do to make sure there's enough cash to meet your expenses as they fall due? Profitability will take care of itself. Asset size will take care of itself. Projects will take care of themselves. First, for you as a business to survive is cash flow. How is my cash flow? How do I maintain it positively? Such that in the next 1, 2, or 3 months, I'm not looking for money of dealing with this. And because of this state we are in now, first thing you should look at is not debt. Don't go borrowing, except it is very important. Borrowing reduces your cash flow. How do I mean? You need to pay salaries. You now go and borrow 100,000 to pay salaries. After you pay that salary, how do you pay back the 100,000? You have just reduced your cash flow by 100,000, actually. So don't go borrowing now. You need to manage your cash flow. It's essential. Then, your cost. You need to now prioritize your cost. First thing is, what are those expenses you must pay? You must create a list. It's called a must-pay list. And that must-pay list is expenses that are important for the smooth running of your business. And they are usually grouped under running costs. Like I said, that's cash flow. Cash flow is your running cost. What are those things you must pay? For example, power. You must have money to manage your power cost. And even those power costs, you need to now rejig it and reorganize it. How much do you spend normally in a month, in a day, in a year? What are those essential things you can cut? For example, when you have lights out, as in when there's a power cut, must you put on the alternate power immediately, like your generator? Can you wait 1 hour before you put on the generator? Or instead of leaving the generator for 8 hours in the day, why not bring it down to 4 or 5 hours in the day? How will it affect your business? Will it be negative or positive? Negative is like if you're an IT company now, you cannot do without constant power. So if you don't have backup power like inverters or UPS, then don't bother about don't bother about cutting the number of hours you use the gen. Because if you're an IT firm where your customers, your platform must be up 24/7, then you cannot cut out that part. So it's not a one rule, one cap fits all rule. It's tied to business by business. So you look at the nature of your business. What are those costs that take priority and you can do with or without? Because different businesses are doing it differently. For example, if you are in the service industry, probably like a consulting outfit, normally when you're at home, probably once there's power failure, you go and put on the gen because you're at home and you must enjoy the little luxuries of life. After all, that's what you're working for. But now you are not just home, you are working from home. So automatically, if you're a consultant and you're not facing a customer presently, and it's not that you're running a training or anything like this one, then once there's a power cut, you need to postpone those so-called luxuries of life and leave that for now. Why? Because you're cutting those expenses. You prioritize those expenses, but you are still cutting it at the same time. So you need to look at all those your running costs. Which ones can you do without less or more? That warehouse that you are renting, what's your volume of sales in the last 3 months? Do you need that size anymore? If you don't, it's time to cut it to get a smaller warehouse, or do without it for the time being. Those are the things you need to do. But don't forget the place of tax. Pay your tax. Although, thank God, the government is giving some of us tax breaks and has rejigged our tax system. So look at it and look at how to take advantage of that, because those are debts you cannot do. Those are debts you must pay also, and they take priority. Also, please, we know the times we are in, but a debt you should not also, a must-pay debt is also your staff salaries. A must-pay debt is your staff salaries, which includes your own. You know, more often than not, entrepreneurs say, you know what is happening now? I don't have money for salary. If you want to stay, stay. If you want to go, go. That's a wrong approach. I'm very sorry. It's a wrong approach, because that's the human part, and the human beings are part of your assets. And if you mismanage them, you are losing like 25% of your company value, because they will go, and they will go in the wrong way. All you need to do is reorganize, look at your revenue, look at what you can pay realistically, because I know what I'm saying now, some other people will take it and use it the other way. What you can pay realistically as salaries, and sit down with your staff and negotiate. And when I say what you can pay as salaries, it's time to measure productivity. I would rather change your pay from a flat pay to a productivity pay, maybe even increase it. Why? Because if it's now a productivity pay, if what I used to pay you was 100,000 for doing something or nothing as a staff, that is, it's not your fault that there's no business as a staff. But at the same time, you must get that your 100,000. So I now need to sit down and measure your pay productively on a hour by hour basis. Based on that, there is a probability that I'm underpaying you based on the volume of income you are giving me. So I now rejig it and look at it. Okay, if for 100,000 a month, you are giving me 1 million naira in business, how can I get you to give me 2 million naira? And I now pay you 150,000. I sit down with my HR and we will look at it. We do what they call KPIs. And based on the KPIs, I come back to you that, you know what? You are working from home, but my business is not making money. Based on these KPIs, I am ready to even give you 150 instead of 100,000. But it's now up to you to achieve it. Doing that is a must-pay expense, but now the staff is now more productive and your business is now increasing revenue. That's how you handle salaries. You don't just cut them off or fight everybody and get out, or cut month end, you just switch off your phone and be unavailable till another 2 weeks. No, your business must run. So be very objective, because even your staff are human beings. Everybody knows what is happening, but don't just cut them off. Look for how you rejig the pay structure such that everybody still wins and everybody still gains. I'd rather be working from home knowing the volume of work I do, it affects my pay, than I'm working from home and nobody is telling me anything about when I will get my salary. No, it will make me naturally reduce the volume of work I do. And of course, that will affect your business negatively. Pay your debts, your loans, your mortgages. What you can do, like I know some banks presently, if you go there, you can renegotiate and get a moratorium. That is a period where you are paying only the interest, you're not paying the principal. That's what they mean by moratorium. Some banks are doing it on their retail loans, then even mortgage loans. Some are doing it. What CBN did, I think, was reduce the expected amount you have to pay as interest through the banks. So go and renegotiate. Your rent, there are so many people I know of. We know what is happening now. Don't say, oh, landlord should know now. Landlord needs the money. And landlord is not a witch to read your mind or know what's in your pocket. What I expect you to do is be responsible and go to the landlord and say, look, my rent will be due in. That's where there's a problem. Some of us will now be unavailable for the next 3 months after, or 6 months after rent is due. Or you will not be available until landlord gives you a quick notice. No. We know what is happening now. Do your numbers right, which is why the first thing I say is be on top of your numbers and go to your landlord. Landlord, please, the situation on ground is my rent will be due in 3 months' time. I will do everything possible to have that rent available. Or even if not, this is how I plan to pay. Instead of paying you a lump sum, I'm going to pay you over the next 6 months, which is 3 months before and 3 months after. I'm sure to some extent the landlord will understand. Because the truth is, I throw you out and my house is empty because nobody in this situation can pay. Or I manage with you and I collect this money as you pay it and I have cash and I'm in business. Because the same way I'm advising you to rejig your business and manage your cash flow, the same way a landlord is here listening to what we are talking and thinking of how that can be done for the tenants too, so that everybody wins. A situation where it is about everybody, not just you alone anymore. Everybody has it. It's time to sit down, do your numbers, and don't wait for your creditors to come to you. Go to them. Don't wait for your creditors to come to you. Go to them and renegotiate. Have your numbers already and how you feel, not convenient, how you know you'll be able to pay them as and when due responsibly. And then negotiate based on that. And they too will look at what works for them. And everybody, both of you will come to a compromise. And you are still there managing your cash flow and running your business. You don't, being in debt is not a reason for your business to go under. No. But the challenge we usually have is that many of us now run away from the creditors. No, don't run away from them. They don't want you to be out of business, even though they want their money. Because if you're out of business, they don't lose just you, they lose their money also. So come up with a realistic repayment and renegotiate. We all know what's happening in the country. Come up with a realistic thing. Go to them. Then benchmarking. A lot of us see other businesses as competition, and so you are in a hurry to do better than them. What do I mean by do better than them? Oh, their staff, they have 3 official cars. You go and buy 6. And then having bought 6, you have 1 or 2 not in use. You just park there. Why? You want to be the trailblazer or the leader in the industry. I'm sorry, in this situation, that does not work. If actually you have a company that is doing that, go and sell those cars now, and put the cash and add it to your cash flow. But what you do is, that company that is using 3 official cars instead of 6, why? And then is it working for them? If it is, please use them as your benchmark and reduce the number of official cars in your office. Those companies that are not, they've stopped using their staff buses. They've either outsourced it or leased it out, or they've canceled it entirely. How is it working for the staff positively? Work with that. Work with that. Remember, how is it working for the staff positively? Especially now that it's more people work from home, and then people don't need to come to work every day. Some don't even need to come at all, except it's an essential service. Automatically, if you are offering staff bus service, you don't need that anymore. Cancel that. That's what I mean by benchmarking your cost. You cancel that, so the staff bus cost has gone. And you now arrange how your staff is picked up and dropped off when they need to come to the office. You keep doing that. Check what other companies in your industry or your sector are doing and how you can use that to benchmark your cost and even your revenue. Some companies in your industry are half your size, but they make twice your profits. So how do they make twice your profit is what you should be looking at, so that way you can increase your own revenue. You need to check. And it's different industry by industry, sector by sector. That's how you benchmark your cost. I know it's difficult getting this information, but it is possible to get it. More often than not, merely looking at their financials to a good extent would help you out with that. When you benchmark, you will find out where you are spending too much and look for how to negotiate lower rental rates. For example, if we are using rent, let me go back to that example I used. You are in a 6 million naira per annum location. If not all your staff are coming to work anymore, while a good percentage are working from home, that means you don't need that big office you used to have. You can now go to a smaller, probably a 3-bedroom flat from a 4-bedroom duplex in a shared location, which will now reduce your cost by 50%, because a 3-bedroom in Lekki, I think, is about 3 million. Imagine that 3 million now adds to your cash base. And those are the things you need to be looking at. What are those things? What do you need? What is it you don't need? you look at it. Instead of opening the office every day, why not reduce the number of times you open your office and use that money to buy data for your staff that are working from home so that they have data to do the job. That's how you cut your costs. Then inventory. If your sales are not moving as they used to, do you need that volume of stock that you used to have? Then, like I said, your numbers, know how much each employee is giving you in terms of revenue. The truth of the matter is this. Whenever people ask me the difference between human resources and human capital, this example is where it comes in. I said in human resources, all I worry about is when will this person retire? How much is this person's tax, pay tax? How much is the person's leave? When is it going on leave? That's human resources. You manage the human beings and resources. But I believe in the modern is human capital. How much can I make per employee? And there's no employee, even your cleaner, can be attached to the revenue base of your business. There's a way we do it. I'm sure Mr. Joel, if you contact him, will be able to give you the template of doing that. Your cleaner, your security men, they add to your revenue base, the service they offer. You need to know how to link it. It affects their KPI should be able to give you value in your revenue base. It's time you measure that. And it's a human capital function. And based on that, no, are you optimally using, or are you optimally, let me not use the word use, are you optimally engaging your employees? Are you optimally engaging your employees with respect to your revenue base? And note, it doesn't mean that if you find out it's not, that you now sack them. You have 50 employees, but based on your revenue base, you need 20. You just check the list and sack the first 30. No. What you need to do is now look for how to productively engage them. Maybe what they were doing before gives you 100,000 revenue per employee, whom you are also paying 100,000. Now look for how to rejig their job function such that it will increase their revenue from 100 to 120 or 150. That's all. It is when you've done that and you've done it and you've done it where you now find that there is no other way you can still maintain your 50 staff. That is when it's a last resort. But when you sit down and look at it, at P4P, we should be able to now help you see how probably your 50 staff will give you 50% more revenue than what you are making presently. That's how it works. Now, set-off limits. In accounting, when you have set-off limits, it's relative company by company. Set-off limit is what's the minimum amount of cost are we incurring, or what's the minimum amount of revenue do we want to make? Otherwise, if we can't make that revenue, we are not interested in that business. Same thing, what's the minimum amount of cost that we can neglect? Using two companies, let me use the food sector. A Nestle can have a stock set-off of about 1 million naira. That is stock 1 million and below, they can neglect it. It is not mandatory, they count it or consider it. While a small John Doe tomato, the set-off can be just 500 naira in stock. They can neglect 500 naira, but nothing less. So it's different company by company, but this helps you. It helps you because when you have redefined your customer, redefined your business, and you know your numbers, you know now that, like going back to the first example I used, where your cost on rental alone is 12,500 naira per hour. Any business that cannot give you 12,500 naira per hour, that's your set-off limits. You will not go into it. You don't go into any business that cannot give you that amount. So that it's not about how many of those businesses you can do in an hour that will now keep your business afloat. That's the set-off limit. That's how you do it. You set it up like that. Same thing with cost. Anything, you set up a minimum cost. Anything that costs you more than that amount, you will not touch it. And you need to start setting that, knowing your numbers and arranging it in that order. And I'm sure when you engage us at P4P, we should be able to help you look at that and come up with something for you, different set-off. So we move to making cuts. I will take 1 minute to take some questions so that we can look at all we've discussed so far and know if there are any questions we want to ask. 1 minute to ask some questions and then know what questions we want to ask. Oh, okay. I should take it again. Okay, somebody is saying that I should come again on the cut once, measure twice. What I'm saying is this. Let me give you an example. This is a notebook in front of me. I'm looking to how to ensure that I use this notebook for the whole month without buying another one. So what do? I look at it. I first count the number of pages. Let's assume I use 1 page per day, and I find out that there are 30 pages on this notebook. So having 30 pages on this notebook, that means it will last me for the month. I now said, is it really? It will last me for the month. I now check again. You know that I've now measured once. I measured once that has 30 pages. It will last me for the month. But I now look at it. A normal notebook also has 30 pages. So the normal exercise book will also last me a month. But this notebook now, does it have the same number of pages as a normal exercise book? Looking at it, no, it doesn't. Oh, I now measure again. How many lines per page? A normal notebook, I think, is about 21 lines. This one has 30 lines. Remember, I'm measuring a second time. And based on that, I now realize if it has 30 lines, I have 9 more lines per page for 30 days. So 9 times 30 means I will use this book not for a month, but for a month and a half. So based on that, I now finally cut my expenses on notebooks by that 50%. You can say I measured twice and I cut once. The same thing for business. Don't just review. You review and re-review your expenses. And you now go more specific. Like I said, first one was I use 1 page a day. I now measured it is 30 pages. So if it's 30 pages, this book is okay, I drop it. No, you don't drop it. You now re-review. Based on 30 pages, how many lines per page? So based on the lines per page, I now found out that there is a 50% cut I can make because I have 50% more pages on this particular document. So that's what we're expected to do for our business. Check your costs. And I use power as an example because it affects all of us. Power, if normally you use your alternate power, which is the main power in this country, sadly, which is your generator, you use it for 12 hours a day. Is it possible you reduce it to 8 hours a day? You start looking for the possibility of doing that. You measure twice. At first, it might seem not possible, but measure a second time. Whatever you tend to reduce, that will now give you more cash to manage your cash flow. That's measure twice, cut once. It is when you've gotten to that point, you now finally make your cut. I hope that explains it. So let's move on. Now, in cutting your costs, what you need to do are there are various aspects you look at. And usually the first one is your suppliers, which are your vendors. You need to be more effective in getting your supplies. You need to be more effective in getting your supplies. Let me give a practical example. Now, I have this customer. She calls me up and she tells me that going forward, she will not go to the market to buy her. She's into flowers. So there is this vase that they put under a flower vase. It collects the water that comes out from the vase so that it keeps that location clean. Normally, when she wants to buy for her customers, she goes to Lagos Island. She buys there. Having bought from Lagos Island, she now comes back and supplies to the customer. But she now goes online and finds a company that supplies at almost, remember, it's not the same price, it's a bit higher, but almost the same price as what she gets it from Lagos Island. And then the only extra expense for her is the delivery cost. So she calculates what is the extra amount, one, then add the delivery cost to it. That's the additional cost of buying from this online location. Now, how does she save or make money from that extra amount? She says the time it will take her to go to Lagos Island and the time she will spend negotiating and buying and coming back, that time now has been saved for her. She can use that to do marketing to get more customers. And so for her, she's no more going to be going to Lagos Island anymore to buy these vases. She'll be ordering online and using that to increase her revenue base by getting more customer. She has reorganized who her vendor or her supplier is. By that, and then the transfer money, she said the transfer money she also spends is actually more than this additional cost of delivery and the extra money on top of the price. So it pays her big time. That's how you reorganize. You have to sit down with your vendors and either come up with, oh, Oga, you're the one supplying me, or you're the one I buy from. But you see, if you can give it to me at this cost, I will still buy from you. If not, I'm sorry, I have to move on. You have to renegotiate with your vendors and you have to renegotiate your pricing and renegotiate your supplies and how the supply is done. If it's warehousing, you have to renegotiate with the warehouse people. You have to review. Then also, the number of suppliers you have. Sometimes, a lot of us have one good supplier and stay with them. Well, with the situation of things, you need to always have, even under normal business, you need to have an alternative. So that the day that supplier messes up, because it will come somewhere in between, you have an alternative. And when a supplier knows that there's an alternative to them, they are careful the way they deal with you. They deal with you more seriously. So that's why, and at this point we are in, you need to do that. Why? When you have an alternative, between the both of them, there will be a price war. And who gains? You gain. It's as simple as that. Never leave yourself vulnerable, because also, if the supplier disappoints you, it is not you that will suffer, it's your business that will suffer. Because your customers' needs will not be met and they will not give you business. And it might be for that one singular event, they move on to the next person. Because just as you have some alternative to your suppliers, your customer has alternative to you as a business. So don't give them an opportunity to look for that alternative, which is why you need to ensure your supply system is taken care of. And how is your supply system taken care of? It is your vendors. One, negotiate with your vendors such that you try and get optimal pricing from them by either getting additional value or some form of discounts, number one. Then, number two, negotiate with your vendors of increasing your credit. You know, there's what you call supplier credit, where they tell you, I supply you this thing, and you pay me back in 1 week or 1 month. You can now tell them, please, is there a way I can increase my credit period from 1 week to 1 month or from 1 month to 3 months? As long as they want business, they will find ways around it, just as you too will find. They might not give you the 3 months or 1 month, but they'll give you something. And that something they give you is what you can now use to, manage your cash flow and do more business. It's called your ability to turn it over, because the law of money is about the velocity of money. Your money should not be sitting idle. So the more money that comes in, the more you move that money. And the more you move the money, the more money you make. It's as simple as that. And so the more you have your consumer credit, the more you should be able to make money, either directly or indirectly. Indirectly is a situation like the lady I talked about now, whom, because now she doesn't need to leave her home, but she gets her goods at a slightly higher price, she uses that time to move around to get more customers instead of just sitting down in one place. That's how you need to do it. That's how you need to look at it. And that's indirectly making more money. So, reverse auctions. Reverse auction is simply looking inwards at how you can make more money from your money. That's how I can explain it. But what do I mean? You are selling like 3 or 4 products and you have your set-off limit, like I explained. That set-off limit, you cannot sell this product less than 100,000 naira, for example, or you cannot offer this service for less than 50,000 naira. Why not look for somebody that can offer that service at 30,000 naira? You take it off that customer as long as it's within your own company standards and give it to your customer at 40 or 45,000. For your customer, you have saved value. For you, your cost has dropped because you are not the one on the value chain anymore. And with that, it's a win-win for everybody. This is common in the IT industry, where you have whitelisted products. Where there's a product they are offering, you can set your standard and tell them, give me this product, and then they give it to you at a price less than what you would have been able to do it. Why? Maybe you are a bigger company where you need to pay your programmers. The other person is one person and does not need to pay any programmer except themselves. So by doing that, that person can deliver it to you at a lower price than what you are offering it. You get it from the person whitelisted, and then you offer it to your customer. It's still the same product, the same value, maybe even better. That person might be more innovative than you, but it's cheaper for you and is better for your customer. All you need to do here, you need to have your lawyer very close by to make sure that you are well protected. At the same time, protecting that person now producing this product for you. Because sometimes there might be some legal implications, some things you do that will have legal implications, and you just throw it at that person. Please don't do that. You don't destroy another person's business for your sake. So that's reverse auctions. Look for alternatives. You don't have to be the one producing everything, really. You don't. And then you can always throw out bids among among sellers or different people, suppliers, and let them compete and come up with a price. Then it's time to review your current contracts. Your current contract, it's time to review them. Do you still need some of those contracts? It's sad, it's in my industry, but you need to review your outsourcing contracts. For example, maybe before now, as an office, you outsource your cleaning and you have about 5 cleaners in your office. But you are not working every day anymore. And even the days you work, you might not need all 5 cleaners. So you can go back to that contract that you outsource and talk to the outsourcing company. Please, we don't work every day, and it's not everywhere that we need to clean every time, but we need everywhere clean. So look at your contract. Is there a way you can review from 5 cleaners to 3 or even 4? And the company, in fact, nowadays what I advise is don't even wait for your customer to tell you. You review the service based on the new service of the new way your customer carries out their business and go back to them straight. They will value you more for that. Oh, client, see, we give you 5 cleaners every day, but you guys are not open every day. So you actually don't need us every day. Number one. Number two, because it's not all your staff that come every day, our cleaners can take time and do the cleaning. And instead of finishing in 1 hour, they might finish in 4 hours. So based on that, instead of giving you 5, I will give you 3. You have saved costs for me, so I will not let you go. So it's time we do such things. Don't even wait for the customer to review. Review. That's just it. The advantage of that is this. You would have been worried about employing more cleaners to go to new customers. And because of the situation on ground, you don't want to really market. But now you have taken 2 cleaners from your current customer who will be paying you like 20% less because of the reduction you have given them. And you now go and get another customer and give these 2 cleaners to that person. So the cost of recruitment is taken off for you. And these cleaners will still be at the same salary, which this other customer might pay you more because of the pandemic for cleaning. So you can see it's a win-win for everybody. Don't be afraid. Change is man's greatest fear, but it is also man's greatest need. So don't be afraid. Look at it, review contracts, you as the owner of the business or the management, and then you also as the person being given the service. Review. But please don't ever over-review or review negatively. Like some people, they don't even look at the numbers. They just wake up, okay, you are giving me 5 cleaners. Please reduce it to 2. And you know it's not possible. You're not ready to listen to this person that is telling you 2 cannot work. No, sit down. It's both of you. Have an intelligent discussion about it. Bring your numbers. Let the outsourcing company bring their numbers and agree on something. But both of you should be realistic to yourselves. That's where the problem is. You just want to review unrealistically. Be realistic to yourself. Review all your contracts to cut your costs. Even your sales contracts, review it. You know, with the existing situation on ground now, you are supposed to do 1,000 items to this customer per day. But what is on ground, you cannot do more than 500. It's not a crime and it's no big deal. If you cannot find an alternative to make up for the remaining 500, review your contract, go back to the customer. Please, we can't do 1,000 anymore. Can do only 500. The customer will respect you for that. Review all your contracts, sales, human resources, engineering, online, whatever, review them. I've talked so much on this reducing physical overheads that I don't think I need to talk much on it again. But all I said is reduce your overheads, reduce your total costs, reduce the cost of running your business physically and otherwise. So, asset recovery is still about numbers. It's still about numbers. Asset recovery is still about numbers. Okay, let me read what somebody said here. The person says, the aim is to gain more customers by reducing price. This is called lowballing in accounting. But I want to know, in what way will I gain profit by reducing my price? Especially is a new market I intend entering into. It's very simple. It's a numbers game. This is pure trading. Now, at your current price, let's assume you charge a customer 100,000 in a month, and you have 1, 2, 3, 4, 10 customers. So your average turnover is 1 million monthly. But now, because of the situation on ground, you want to reduce your price so that you can keep your customer, give them a discount. It's fine. What I expect you to do is come up with a marketing budget. Let's assume 100,000. So automatically, you need to make that 100,000 plus maintain your 1 million. Then you still want to give your customer a discount. What you can do is first start with the customer you know. Tell them, look, I'm going to reduce my business with you. Let's assume you are giving them an accountant. That's you have an accountant on ground. The accountant comes to the customer site 3 times every month. Are you with me? The accountant comes to the customer site 3 times every month, and the accountant is paid, 3 times every week. And the person is paid 100,000 your company is paid 100,000 every month for this. What you can do now is go out and look for more customers, but you will not employ more staff. You tell this customer, I want to reduce my accountant's visit from 3 times a week to 2 times a week, which gives you 4 free days for that accountant you are using. Then you go to another customer and you tell the customer, for reducing it from 3 times a week to 2 times a week, instead of you paying me 100,000, you will now pay me 80,000. That's a 20% reduction. I don't see any customer that will not jump at that, especially if you are still giving me the same reports and the same output as you used to before. Then I now go and I increase my marketing budget by 100,000, which gives me more customers. My 100,000 budget, I should make sure that my strategy for advert and marketing should be able to give me a minimum of 4, if not more, new customers. So if it gives me 4 or more new customers, whom my same accountant will now be visiting once a week instead of 4 times a week, and I reduce my price from 100,000 to probably 50,000, I have invariably increased my revenue while meeting up to my additional costs. That's how you do it. So with that, you have increased your market share, you have increased your revenue, and you have increased your profitability. Why? You did not increase the number of staff you are using, but you have increased your business by 1, 2, 3, 4 customers. That's 100% extra. It's simple. I hope we understand that works. That's from Temito.
Can you take it again, sir? Sorry.
Okay, I'll take it again. I said, assuming you offer accounting services. Now, because it's easy when it's products, but it's difficult in the service industry, that's why I'm using that as an example. So, but I'll give an example in service, I'll give an example in products, because I can see it's so important to you. Now, in service, you are offering outsourcing services. As an accountant, you offer accounting services where your staff comes to the customer's office 3 times a week. For those 3 times a week, your company is paid 100,000 naira for that service. And you have like 10 of them. Are you with me? So now, as you have 10 of them, your average monthly revenue is 1 million. But now you want to increase your revenue while giving your customer a discount. What's the discount? You want to give them a 20% discount, which reduces your monthly revenue to 800,000. As it's reducing your monthly, because that's 20% off to 800,000, what you need to do is that you go to your customers. You tell them, look, you guys are not open every day, for example. I'm talking using the pandemic. So instead of my accountant coming to your office, wow. Instead of my accountant coming to your office on a daily basis, you are open only 3 times a week. Let my accountant comes just 2 of those 3 days that you are open. If you agree, I will reduce your monthly fee to 80,000 from 100,000. When you do this, you now add an additional marketing budget of 100,000. What are you trying to achieve? With your marketing budget of 100,000, you should make sure that that budget is a budget that will give you a minimum of 4 new customers. Getting 4 new customers is what? Increasing your business by 240,000. So increasing your business by 240,000 without you hiring any extra staff, your revenue has increased from 1 million to 1,040,000. So increasing to 1,040,000, the truth is, if you have 10 customers, that means you have a minimum of 5 staff doing this. And if you reduce the number of days, your 5 staff can now serve twice the current number. If you reduce the number of days by just this one day. So automatically with your marketing budget, you'll now be able to serve 10 extra new customers. Serving 10 extra new customers, you have increased your customers from 10 to 20 who are paying you, instead of 100,000, they're not paying you 80,000. So 80,000 times 20 is what? Times 10 is 800,000. Times 20 is now 1.6 million. So by giving a 20% discount for reducing 1 day of service from 3 days, you have increased your revenue by 600,000 naira, which is a 60% increase. Very simple. That's service. That's service. So with that, your customer is happy. Why? They took out only 1 day out of 3 days, and they got a 20,000 reduction in business. So they're happy with you. You are happy by taking 1 day, you are increased the volume of work your staff can do by 100% and has given you 100% more customers, increasing your revenue from 1 million to 1.6 million. So because always make sure whatever you're doing is a win-win for everybody. And then for your staff, if you are now making them do a little extra more work, because the truth is 1 day. They used to do 3 days. You are now telling, instead of doing 1 day with 3 days with 1 customer, you are now doing 3 days with 2 customers. But productively, if you can do the same 3 days with 3 customers or something like that, I will increase your salary probably from 50,000 to 60,000 or 70,000. You have helped everybody, and your revenue will only increase more because your staff productivity has increased. So everybody was touched, and you made more money everywhere. Just a little extra, but overall as a business, your volume has increased by 60%. The extra cost should not be more than 20%. So automatically you have a 40% increase. That's service. For product, you check cost of delivery, cost of providing that product. That cost from raw materials all the way to putting it in front of your customer. You look for places where you can cut. It might be delivery. Instead of you being the one to do the delivery, you outsource that. So that cost is taken off you. So you just check all around. Maybe packaging. Instead of using a thick paper that costs you 50 naira, you might use a lighter paper that still gives the same quality of outlook and reduces the price from 50 naira to 30 naira. because 20 naira per 1,000 is not the same thing as 50 naira into 1,000 places. So that's the cost reduction in your product. You look for all those areas, or maybe where you buy it is now closer or farther. You just look for everywhere in your product where you can reduce your cost. You add it up, and at the end of the day, you should be able to get a 20 to 30% increase. Or it might be the raw materials, the source, or the pricing. You look for how to renegotiate. And then coming to even the raw materials, sometimes you don't even need to renegotiate the price because the price might reduce the quality you get. Stick to the price, but increase your credit period. Why? If they were giving you 30 days credit, try and get 60 to 90 days. If you can get like 90 days, what you need to do is increase the volume that you are now doing for those 90 days. If you increase the volume, then you have increased your sales and profitability has increased. That's how you do it for the sales, the product area. Those are the ways of going about it. So my time, you are welcome. Our time is so far spent. Okay, so they've given me 30 minutes extra. So based on that, I'm now going to rush the rest, but I have discussed everything that we need to know, really, practically. So I'm only just going to talk about the theory now in the slides and see how we do it. So asset recovery is how do you get an asset? I mean, you first have to do an audit of your assets, then look at, are you optimally using them? How can you divest them into other areas? I go back to my example of the staff boss. You used to give your staff bosses, but now you realize they don't come to work every day and many of them work from home. So you don't need that staff boss again. Why not sell off that asset so that you can use the money into other areas of the business? Or if you have official cars that normally, what do you call it? That's what you use to carry your staff around, but now everybody's working from home. So those cars are lying fallow. Put them in Uber. It's not a crime. It gives you additional income. So that's the asset recovery and divestiture. It's just how to reclassify your assets such that they are still making income for you, but from a different area. And that's the same thing with asset redeployment. You are just redeploying it. And then you can reclassify. For example, your assets might be, now some companies do this. Their cars might have by ideal accounting, your car is 4 years, maximum 5 years. It's fully depreciated, isn't it? But now your cars are not working every day. So the car value is higher and the car can last longer. So why are you still leaving it at 4 years on your books? Change it to 6 years. When you change it to 6 years, what happens is your depreciation cost drops. Cost of maintenance too will drop. And the asset will still be in your books, giving your balance sheet still a bigger buffer. It's as simple as that. With that one, you can now negotiate bigger transactions because your balance sheet is still big and make more money. It's simple. That's all for asset divestiture and reclassifying. Same thing for labor. Labor, I have been talking about it all through. So I will not flog it anymore. All I have said is what I'm saying. Number one, review your staff costs. Look for how to improve in labor efficiency and labor productivity. If you are sticking with JD, it's time to add KPIs to what your staff does. You see, JD measures input. That is, your job description as an accountant is come to work, do my P&L and my balance sheet. That's all. So as long as balance sheet and P&L is ready, I'm fine. You have done your job as an accountant. But now bring in KPI. KPI doesn't measure input, it measures output. That is, my balance sheet should be done, yes. But when should it be done? And how should it be done? That's what the KPI will be saying. Why? That now brings in efficiency and increases productivity. Because when you do that, ideally, it shouldn't take more than 1 week to do your financials as a company, your monthly financials now. If I was 1 week, maybe 3 days, if accountants have been up to date. But now, if before now, you do that, that's all they do for a month. I just told you it takes 3 days. I'm sorry to all the accountants. So automatically you have 27 days. So you need to now look for work for those 27 days that you give that staff, which is now increase in productivity. That's where I'm going to. So those are the things you do. You look at it and you work with it. And like I said, we can always help you with this part in P4PE. Just contact us whenever. This is our forte. So that's workforce. Then even overtime, the area of overtime, your overtime pay. Why do you need overtime now? If you do a proper measure of job function and job duty and job output, you might be able to eliminate overtime entirely. So review it, and that reduces your cost. Although even in Nigeria, people don't consider overtime, but it's time we even start considering it. Especially when you're working from home, the number of hours you should work should be defined, and anything beyond that should be considered as overtime. And so you now need to measure your overtime when it's exceptional and when there is none. The truth is, overtime pay is a job measurement. If overtime is regular and constant, it shows that you are understaffed. But you are not on, you now have to measure that job function to know, is it actually that you're understaffed or you have the wrong staff doing that job? So those are the things you now need to be measuring and checking and matching it. And then your staff, go back and revisit their CV. You might feel that they are good in finance. Maybe when you measure their job, like I just did for the accounting, they have 27 days. Go and check the CV. Maybe the person has admin capacity also. Then add admin function to the person's job. So by then, you don't need the admin staff, and that has reduced your staff cost. That's all you need to be doing. Then, of course, always make sure sacking is the last thing you do. It's not the first, second, third, or somewhere in between. No. Don't lay off until there is no other option. When you've tried all the other options, because the staff might not be doing well somewhere, you can redeploy or rejig the job duty. And with that, you keep the staff and make more money as a business. Because at the end of the day, for a business, it's always about making more money. So yes, but when you get to that point where you need to lay off, do it responsibly. And if you have no choice, like I said, take out all emotions. Still go ahead and do it. I cannot say don't lay off. If you really, really need to, do it, and don't be afraid, because this is the life of your business we are talking about. And if your business dies, those people will go off somewhere else to get another job. Where would you be at that point? Where would you be at that point? So, and with that, I come to the end of my session. I think I can take, because my 30 minutes is also up, so I can take like 2 questions, and then any other one, you can always reach out to us later. So the session has not ended. The session has not ended. We will continue with you guys online. Okay, somebody says manufacturing does overtime. Yes, they do. Yes, for a recording of the session, I cannot say yet whether you get it. Okay, yes, a recording will be available. You just contact us after. Yes, salaries also will be reviewed. Any other questions, please send us a chat. We are waiting before we close the session. Any other question, send us a chat. We are waiting. Send us a chat. We are waiting. Send us a chat. We are waiting. Okay, so thank you very much. I hope you had fun. I did. So I wish you guys all the best.
Any other question from the people? Thank you very much, Mr. Ayo. He has done wonderfully well. Materials and the recording, please type your email.
Okay. The truth is, it goes beyond HR and finance. It's the entire company. It's not a particular department. But yes, there are people that will be driving it, and those driving it is HR and finance. But it's not only HR and finance. The management must be there, because you need to look at the company holistically. There's admin. For example, it's admin that will tell you the places where you need to cut some costs in terms of the physical assets itself. They are the ones that supply asset lists to accounts. and ensure, those assets are well managed. Which other departments? There's security. I remember I talked about cleaners. There is a cleaning department. There is a security department. Advert, you need to also look at your advert. That's marketing, advert budget. Do you need to advertise as much as you used to, or advertise less now? Example I will use is in the airline industry. When this pandemic started, airlines stopped advertising. It's only until recently, because they heard that they were about to come back up, that they started advertising. And I liked how they went about it. They didn't advertise that, come and fly with me. No, they advertised from the angle of CSR, how they are supporting us in dealing with the pandemic, which means there's a change in the budget. So those are things you look. And when I looked at their advert, it seemed as if it cost a bit less. So it's a holistic thing, it's the whole organization that will involve. You don't leave out anyone. It's just that the drivers will now be HR and finance. Finance will come up with a budget, HR will look at it in the people angle, and HR will come up with a budget and give it to finance. Every department will give the new and reviewed budget to finance. So that's how it works. HR will look at the human capital part and now send that to finance, and finance will look at it, then submit to management, of which final decision rests with management. So it's a holistic thing. Thank you.
Okay, thank you for that. Any other question? Does anyone have another question so that we can, the facilitator can?
Conflict is inevitable in running your organization every day. Conflict is inevitable, but the issue is this. Management, it starts from management. They have to be clear on their vision and what they want to achieve. Because it has to, as I say, the oil flows from the top. Once they are clear, then they must encourage a culture of clear communication, no politicking, no negative culture, and then encourage everybody to work as a team. As long as we all know we are in this together, any good is good for all of us. It minimizes it. It's not that it will eliminate it, it will minimize it. But once there's clear communication, for example, everybody, what causes conflict is called individual interest. This time, in this case, departmental interest. For example, HR will not be too happy letting go of staff. So they will come up with a budget that makes sure there is a minimal amount of people that has to be let go. Or productivity measure might not be as expected. Finance do not see HR as an enemy. What you need to do now is get back to them that, look, based on what you are saying, from our analysis, this thing can be better than this. So can you please go and review? That's all. But more often than not, finance will now say, I have caught you, and attack. No, this is not the time to attack. This is time to work as a team and look for ways. It's a sensitive situation. Yes, I've said remove emotions, but it's still sensitive. Still remember the human factor. And so once we all work this way and there's clear communication and we have 100% support from management, or with management who has no ulterior motive, conflict will be minimized. That's just it.
Okay.
Thank you.
Thank you for that. Any other question before we take our wrapping up discussion? Okay, so if you have any other question, just type it on the chat. We thank Mr. Ayo once again for sharing with us from his wealth of knowledge and background on how we can manage businesses differently at this time of their times. If you are interested in more detailed information, in particular, if you're interested in a program that addresses productivity, profitability, and business growth, we have an intensive 1-month online program that we can refer you to. Right now, I'm sharing the screen on it. Once you visit the website, You were not here. I think I was muted. Okay, so you can hear me now. Okay, so I said that for those of you who are interested in additional information on the business growth and profitability, you can access this program that we have on ProVarsity. So that's what the screen we're sharing right now. It shows you the, you can take the course instantly. We can work with you further than this to examine how you can continue to grow your business, assist your business, depending on the department you are in order to grow and achieve better results. Please type your emails in the chat so that we can get back to you. As at the end of this program, you're going to get the slides that Mr. Ayer used. Thanks again to him. And then you're also going to get the full recording of this particular session. If you did not attend this particular session and you want these materials, both the recording and the slide, we shall ask you to pay. Ayo has spared his time to be here with you. So anybody that couldn't join at this point in time will be constrained to pay for the materials. Beyond that, I think he has done very well, and I think we should give him a very good thank you. Please chat your appreciations on the chat box so that he can receive it. While you're sending your chat appreciation, I am going to ask everybody to unmute and then say a thank you and a bye-bye to everyone. So please unmute yourself so that you're free to unmute yourself and then say your parting words. This is just for 1 minute. Oh, thank you very much, Mr. Basaki. He says your content was well delivered and driven. Okay, thank you all. Thanks again for your time. Thank you and goodbye.
Bye, thank you too.
Okay, bye-bye.